Okay, today we're doing a deep dive into copy trading. Specifically, the risks and rewards of mirroring crypto pros on platforms like BTCC.
Right. We want to cut through the hype and give you the real deal on the risk involved.
And BTCC is our focus here. It's been around a while, hasn't it?
Yeah, since 2011. And they really push the fact they've never been hacked, which in crypto is actually a pretty big deal.
Definitely. So they rolled out this copy trading feature back in 2023.
That's right. And apparently it was quite popular. It's like 600,000 users now.
Wow. And the idea is simple enough, right? Pick a trader, invest some cash, and your account just mimics theirs.
Exactly. You can follow up to 10 lead traders, set your amount, and the system handles the trades automatically.
Okay, but here's where it gets interesting
Yeah.
and maybe a bit scary. The leverage. BTCC allows up to 500x.
Yes, 500 times leverage. And that is significantly higher than many competitors.
Yeah.
It fundamentally shapes the risk here.
It has to, because the lead traders, they get a cut, right? Like an incentive.
Precisely. They take 10 to 15% commission, but crucially, only on the profits they generate for their followers.
So they're motivated to make winning trades, which sounds good, but with 500x leverage.
That's the hidden danger. A tiny market dip, literally a fraction of a percent moving the wrong way, can completely liquidate a follower's position. Instantly.
So if your chosen trader makes a super aggressive bet, you're basically along for the ride, even if it goes off a cliff.
You follow right off. That's the core risk equation here.
Now, to be fair, BTCC does offer some helpful features for newcomers, doesn't it?
It does. They have a demo mode with, I think, $100,000 in virtual money.
Yeah.
You can see trader stats like win rates, profit history. Yeah, it's transparent in that sense.
And they offer loss coverage, something like $50.
Yeah, up to $50 for first-time copy traders,
Yeah.
which is, a small cushion.
But let's put that $50 against the potential downside. Does it really balance out, especially considering this other issue we found, the skin in the game problem?
That's a huge point. Many of these lead traders, even those with impressive public stats, are reportedly managing personal accounts under $50,000.
Wait, under 50,000? But they could be influencing potentially huge sums from followers.
Exactly. It suggests maybe, just maybe, some are focused on strategies that look good on a leaderboard. High risk, high reward, rather than protecting follower capital long term. Less personal risk for them, potentially huge risk for you.
That seems counterintuitive for a platform wanting to build trust. Why allow that imbalance? It sort of undermines the expert label, doesn't it?
It absolutely raises questions about how they vet these traders. And this links into some user complaints we saw. Things like accounts being blocked for, well, mysterious anomalies.
Mysterious anomalies. That sounds vague and concerning.
It does. Plus, general complaints about withdrawal issues. And there was one quite serious claim about accounts allegedly being drained by fake bots trading without stop losses.
Okay, that's worrying. So pulling this all together, what's the verdict for someone listening, thinking about doing this?
Look, copy trading isn't some magic passive income machine. It can work, but you have to be incredibly careful.
Meaning?
Meaning, you need to pick very conservative traders, understand their strategy deeply, not just look at the win rate. And critically, you must set your own strict stop losses manually.
So treat it like the high-risk active strategy it actually is, a high-wire act, like we said at the start.
Exactly. It's active management, not passive following. You have to assume you could lose everything, especially with that 500x leverage floating around.
Right. Which brings us to a final thought, I guess. When does a tool designed for convenience, like easily copying trades, when does it cross the line? Especially with such high leverage readily available. Is it still a sophisticated trading tool, or is it actually closer to, well, highly leveraged, simplified gambling?
That's the million-dollar question, isn't it? Where does that line sit? Something for you all to think about.
Yeah.